In market news now, Asian stocks edged lower as economic data showed that the U.S. services sector unexpectedly softened, reinforcing expectations that the Federal Reserve may skip an interest rate hike when it meets next week. Locally, food producer Premier, which is valued at 7.1 billion rand on the JSE, released its full-year results, and despite the strong performance, the group decided against declaring a dividend as it started trading only days before the end of its 2023 financial year. It aims to reward investors at the end of its 2024 financial year. The group says lower raw material cost inflation in recent months, operational cost inflation is expected to continue amid interest rate hikes, a weaker rand, and South Africa's ongoing power crisis. To unpack what's driving markets right now, we are joined by Martin Smith, who is from Anchor Capital. Martin, thank you so much for your time. So with a lot of these data points reinforcing a slowing U.S. economy and investor attention shifting to the Federal Reserve meeting next week, how are you, assessing market sentiment right now?
I think cautious. You obviously have had a handful of tech stocks pull U.S. markets higher over the last few weeks and months. But I think if you look at kind of what's underneath that, the rest of the market's in a bit of a tricky position and stocks are down, and you look at cash positions that investors have and corporates have, it's at kind of record highs. If you look at volume in the market, very, very low as well. So I think there's a real element of cautiousness in the market and a real lack of conviction because, again, you've got these data points, like you mentioned, the Fed next week, what's happening with inflation and the like. And again, a handful of stocks are pulling the market higher. So it looks like it's good in the offshore markets. But again, I think if you delve a little bit deeper, I think cautious is very much the tone at the moment.
So at 11:30 this morning, we saw South Africa's GDP figures released. Market reaction, especially the rand around those figures, what did you make of it?
So the expectation was for 0.4% up quarter on quarter and 0.1% up for year-on-year numbers. We were a little bit ahead of that from a year-on-year perspective and absolutely in line from a quarter-on-quarter perspective. So the market liked that, that we came in line. I mean, we're all very well aware of the headwinds facing South Africa from power to GDP to high interest rates and the like. So the fact that number came in with expectations and slightly ahead in terms of the year-on-year number meant that you saw the bond markets rally a little bit. You've obviously seen the currency come back. But I think that's also a function of the fact that both the bond market and the currency, or the rand, was very much kind of oversold last week. So I think we've also seen a little bit of bounce back from those kind of very pessimistic levels we saw last week as well.
With a grim economic background, what's the priority at Anchor Capital from an investment point of view and your exposure?
Sure. So I think the big thing at the moment is to not specifically locally get caught up in kind of the fear or the pessimistic kind of sentiment we've seen really come through very strongly last week or two in South Africa, and keep a level head, look for opportunities with clients, invest for the long term, not get caught up, like I said, in the very kind of short-term risk-off appetite that's kind of plagued the market at the moment. So I think it's keeping a level head, looking towards the long term, and also being opportunistic when we can, because in periods of low volatility in high volatility and low volume, you get some nice opportunities.
All right, so Bidco also released their 10-month trading update. They do mention everything that we know is happening, especially with coming out of the local markets, and that's the fact that the environment is quite difficult. They acknowledge that. What did you make of some of the statements that came out in that trading update?
Sure. So, I mean, Bidco has been a great share to own. They've done incredibly well operationally. You've also had some nice rand weakness playing through in their favor, given their offshore exposure. So again, been a very good company to own, and operationally they continue to do well in spite of the headwinds that you've discussed, and they mentioned that a few times in their announcement. Outlook still looks good for them. Very, very good management team. So they're doing the right things, and it's given me no reason to sell the share. We hold it broadly across all of our portfolios. You could ask yourself the question, though, why is the share down 4 to 5% today if the results were so good? And I think it is largely a function of some profit taking. The share has risen dramatically over the last few months, and you've obviously seen the rand kind of come off a little bit. So a little bit of rand strength coupled with a little bit of profit taking is why I think the share's down. But overall, it's been a great performance and one that I'm very happy to continue to hold.
What's your view on, say, South Africa and US-centric equities versus your European and Asian equities right now? Are you seeing opportunities anywhere?
Yeah, I think you definitely are. I mean, if you look at what's happening in Asia and the China reopening trade and some potential stimulus coming from their government, I think that market is very undervalued. But again, how long will that last? Same with South Africa as well. We're very, very cheap at the moment. We've been chatting a lot in the office about the retailers. You look at some of these retailers, SPAR, 52-week low. There's some proper opportunities. And as you know, markets are forward-looking. So I think there will be opportunities. But again, how long does the kind of cheap valuation last? And then if you look at the States, it's obviously about what's happening from an inflation perspective and interest rate perspective there. Market is fairly priced at the moment, but yeah, very much the focus there is what's happening from an interest rate perspective. So lots of different drivers. You've just got to be very nimble at the moment, I think.
As we wrap up, if markets are forward-looking, are you expecting a pullback when it comes to South African corporate earnings?
Yeah, it's a good question because you do foresee the fact that markets are going to kind of pull back on the back of earnings being lower, because why wouldn't they be? Interest rates are higher, consumers are constrained, GDP, etc., and what's happening with Eskom kind of affecting the bottom line. But like you said, where does that create opportunity going forward? So I think a lot of that's in the price at the moment. It might be a little early to get involved, but I think you're going to see some proper opportunities to get involved by banks, our retailers, because again, on a forward-looking basis, 12, 24, 36 months from here, all these companies have recovered, and I think the answer is yes, definitely.
Martin, thank you so much for your time. That is Martin Smith, who's the portfolio manager at Anchor Capital. We're going to take a quick break. When we come back, we'll have more news for you. Stay tuned.